So I'd like to get started today. I want to thank, first of all, I'll just tell you a little bit about our team with the Altini team. Is that we've been around for a team total, since 2016. I've had team players coming in and out. Ruth is on my team. We have Maria, marketing director, that's on our team. Ruth is our buyer's agent that's on our team. And with also, what I consider a pseudo team player is Joe Galvez with John Ann's Mortgage. I do refer him quite a bit to all of our clients out there because he does such a great job with our clients. It's always very important to have someone in our tool belt that gives awesome service. With that, the one thing I just want to stress is that this is kind of like just an informational Zoom call tonight, just to provide you with information, not to try to sell you anything. I just want to make sure you guys know that this is not a sales call whatsoever. Um, we hope obviously that you use us and go through the journey together. But really what this is all about is just get the information out there and help all of you when it comes to purchasing a home. Okay. So let me see if I can there we go. So just quick congratulations. You're taking like the first step on getting towards home ownership and what the journey is all about. Kind of like the purpose of the call tonight. I hope to be able to cover, any fears versus facts that are out there, realities and of the market today. There is so much stuff going out on the market today, so much information that it's just almost like information overload, and everyone's got an opinion about real estate. And hopefully, with the people that we listen to, that we try to stay focused on, we can provide you the right information to help you make a decision. What the basic 10 steps of home ownership is and what the next steps are. As we get into the first one here, based on the market today, I've got a lot of information on here. So just kind of having a brief discussion on it is, and Joe will be able to talk a little bit later on it. Interest rates are radically changing, and it's almost like a daily thing right now. We did have interest rates as high as 8% towards the end of last year. We're off those highs. We're now, depending on your credit score, debt ratio, there's a lot of different fundamental pieces there that determines what your individual rate is. Could be anywhere from 6 to 6.75%, depending on whether it's conventional, FHA. There's all these different programs out there. I'm real excited about Joe to talk about some of the new programs that are out there for 2024 that really is going to help a lot of people get into homes a lot sooner this year. You also probably heard in the marketplace that the Feds plan on dropping the interest rates 4 to 6 times this year. Now, the Fed rate is not necessarily directly connected to, our mortgage interest rates. They're really tied to the 10-year Treasury bond market. However, as the Fed rates come down, the Treasuries start coming down, which in turn also creates mortgage interest rates to come down too as well. And then there's other factors that can spark the interest rate to fluctuate just a little bit. Just tell you a little bit. So the big news that I sent out in an email earlier to all of my clients is that in 2023, the United States sold the least amount of homes in the history dating all the way back to 1993. So less than 4 million homes, sounds like a lot, but less than 4 million homes were sold in 2023. And to give you a contrast to that, in 2020 and 2021, each of those years, one was 6.3 million and the other one was almost 7 million homes sold during the years of 2020 and 2021. So we are definitely off of our highs. And so the big speculation is there ever going to be a crash? And the short-term answer on that is absolutely not. And one of the missing factors in a potential crash is the sheer amount of homes on the market. Because there's such a shortage of homes on the market, we still have more buyers than sellers out there, and that's keeping prices up and help driving the prices a little bit continually year after year. And that's going to be the same thing for 2024 and 2025. Overall, homes prices are still going up. So then the next part of that is they might go, well, Jim, why have I seen a house on the market 68 days? Or why have I seen a house drop in price multiple times during the course of the time that it's on the market? Well, what's different today versus the market from years ago is that the people that have dated homes that maybe have not updated them in a long period of time, 20, 30, 40 years, they're still trying to get what a market value is as if you were to upgrade the house and have it fully upgradable. So what buyers are being a lot more picky because of higher interest rates. And so they're going like, basically, I'm not paying market price for a house that I got to put in $30,000 to $50,000 worth of work into. So that's where some of the things are different. But overall, the values have gone up. So if you look down at one of my bullet points, is home pricing just in December alone of 2023 went up 8% versus last year, December. And we finished up the year at 5.3% in value of our average home versus a year ago. So the values are still coming up. Okay. So I already kind of drained this slide with previously talking. So what I also do is I kind of create a little quick couple of slides to kind of show you owning a home versus renting a home. So I actually took these from the marketplace, and I used two counties just to keep it short. We do a lot of business in Genesee County and Oakland County / Livingston and Macomb, but I picked two counties. And so the average price of a home in Genesee County that finished up in 2023 was about $250,000. So based on today's interest rate, with putting minimum amount down of that $250,000 in all, your average payment when it includes principal, interest, insurance, and all your taxes, the monthly payment now today is about $2,196. Okay. After 5 years, if you plan on living at the home for about 5 years, your mortgage balance will be down to about $222,000. And then how we equated the value of the home 5 years from now at about $300,000. This is just a low ball average of about 3 to 5% a year for 5 years. There's been some years in the marketplace where homes have gone up as much as 14%, but I didn't want to use that in this example. So I just used the very modest 3 to 5% over the next 5 years. So based on a home value, you paid $250,000 for a home in 2024. In 2029, it could be worth $300,000 with your balance. So you built up equity of about $76,000 if you buy a home in 2024 versus 2029. Versus if you decide to rent a $250,000 home in Genesee County. Now, keep in mind, I've seen rentals in apartments and cheaper homes that go for anywhere from $1,200 to $1,500. But the average $250,000 home in Genesee County is going for about $2,100 a month now. So if you were to pay your landlord $2,100 a month, every month for the next 5 years, that's $126,000 that you just helped the landlord pay down his mortgage for. So $126,000 of your money, and you have nothing in exchange or equity of potentially $76,000. What a difference, huh? When you kind of compare what to do of buying now versus renting over the next 5 years. Next slide. Here's Oakland County. Oakland County is the same type of thing. The average home in Oakland County sells for about $350,000. Now, there's homes in Waterford, Clarkston, $200,000. Waterford, there's some houses less than $200,000, but this is Oakland County's average of $350,000. Basically the same thing, minimum down. And then after all of your closing costs, this is principal, interest, taxes and insurance average of about $3,075 a month. Same type of thing. Roll it down after 5 years. If you bought a house in Oakland County at that average price, you'd have equity in 5 years of $108,000 versus renting. Check this out. Rental prices in Oakland County are way more expensive. I just helped someone get under because they just moved out of, from out of state in here, and they're only going to do it for a year while they find the right city that they want to move to. I've actually had a few clients that have done that over the last couple of years. They literally rented a $300,000 valued home for $2,800 a month. So in a period of 5 years, that could be $168,000 you pay that landlord, where you get nothing out of that versus having $108,000 in equity. So some pretty cool math there, some things to think about. Here you go, Ruth.
Now we're going to talk about.
There you go.
Can you hear me?
Yes.
Can you hear me now? Now we're going to talk about the 10 easy steps to home ownership. The first thing I think you guys have already decided or have already done is to decide to make a purchase. The second thing is you want to locate an agent that you're comfortable working with and you feel you can trust. The third is getting your financing in order. Fourth is identifying your criteria, what you're looking for in a home and what areas you want to consider. Then you get out there and you do some homework and go out and see some homes and locate a home that you'd like. Present an offer. Perform your due diligence, which includes the inspection and the appraisal and getting all your documents in order. The eighth step is to participate in the closing and come to the close with your payment. Then you get to move in and enjoy your home for a lifetime. So those are the 10 steps. Now we'll go into them in a little more depth. Okay, the first one is to decide to buy and get your financing in order is really important. You want to get some money accumulated for a down payment and for your closing costs, your earnest money deposit, your inspection costs, your moving costs. And then you also want to locate an agent that you're comfortable with, meet with that agent, get together on this largest purchase you're going to be making. So you never want to work with a listing agent. You want to work with a buyer's agent. And the reason you do not want to work with a listing agent is because they are employed and are loyal to the seller. So their job is to help the seller get as much as possible from that sale, not to help you save. So you want to work with somebody like James or myself that would represent you fully and put together a contract that will work for you. The seller does pay the buyer agent commission. Sometimes people think they don't, but they do. And we can also help you with a trusted team of vendors to recommend. Lenders, inspectors, people to make adaptations to the home once you own it. We offer a full service and a unique and customized service to our buyers.
All right.
So when
go ahead. Sorry. Go ahead. Sorry.
Okay. I think we should be on 3, right?
Yeah, we're on now the buyer. Well, we're still in the section for the buyers,
okay.
The buyer's representation agreement.
Okay. The buyer representation agreement. So we get your mutual expectations in writing. This is part of the offer, and it commits me to finding. Well, I'm sorry. This is not the offer. This is your disclosure stating that James or I would be your buyer agent. And so that's really confirming how we're going to work together.
So this is essentially kind of like a buyer's agency form. You'll find that an agent would like you to sign that right before we get started to look at homes. And believe it or not, it's not a contract. It's nothing more than an agreement between you and your buyer's agent. And the funny thing about this, even though it might be called a contract, the really cool thing about it is you could literally sign this agreement, see some houses, and if you don't like your agent, you can call them on the phone and say, "I'm sorry, this ain't working out. You're fired." And there's nothing that the agent can do about it. So even though you signed an agency agreement for that time period, it's easy to terminate their employment if they're not giving you the service that you deserve. So any agent that tells you that you're locked into a contract with them is farther from the truth. Okay, so just want to let you know. But in the state of Michigan, they actually require us to get a buyer's agency agreement before we actually start working out in the field with those clients. So some agents do that and some don't. I 9 times out of 10, like probably 99% of the time, I always get a buyer's agency agreement. This way, each of you, like, what your responsibilities are, and we know what our responsibilities are, as agents. So that way you fully understand. So don't be afraid to do that. So the next one, the topic that I'm really excited to get started is Joe. Joe, you might have to speak up here a little bit louder because when you were talking a few minutes ago, you were still a little bit soft, on there. But he's got some awesome programs for you for 2024. I know he's going to explain some different programs out there. So give it up for Joe Galvez with John Adams Mortgage.
Hi, everybody. Joe Galvis, John Adams Mortgage. I've been working with Jim for quite a while now. I think it's going on a little bit over 5 years. I've been doing mortgages for around 10. So I've been doing them for a while, and in that 10 years, a lot has changed. There's a ton of information here. Can you hear me?
Yeah, I'm sorry. I accidentally, when I hit mute all, I meant to keep you unmuted.
So I don't know what you've heard, but I don't want to flood you guys with information. The whole point of my conversation here today is to let you know there are options out there for you. Okay, period, point blank. And we've already had a conversation before the meeting started with Verder. Maybe you don't qualify for a home right now. Whether you buy a home today or you buy a home a year from now, I can hold your hand, I can walk with you through that process, and I can help you get to the point where we do qualify. Okay. John Adams Mortgage is a little bit more thorough than the average lender. So I want to kind of go over our approval process here. Always contact me. We'll have no problem helping you out. The turnaround on an application right now is usually less than 24 hours. But yeah, basically we reach out, you reach out to me, we discuss what your goals are. I'd send you an email that has a link to the online application. You would fill out the application. Also within that email was going to be a list of documentation that we need. Some people are self-employed, they're 1099s. The documentation requirement is going to be different from someone that's a W-2 employee, but we find out those in advance and we make sure that we secure the documentation for you. And then one of the things that we do that can help you in a very, very tough market is we can have you conditionally approved. We can have your file reviewed by an underwriter before you place an offer. So that way, when you do place an offer and I call that listing agent, letting them know how well qualified you are, I can say that you are conditionally approved, an underwriter has reviewed your file, and you're good to go. It's almost essentially like going up against a cash offer at that point. Because everything has been verified and underwriter has viewed your file. You can go ahead, Jim. I'm going to go over a few programs here today. Again, don't expect you to remember a lot of this stuff. As I'm talking, I'm pretty conversational. So I know you guys are muted. So I have the chat window open. So if I'm talking about something and you have a question, just write it down in the chat and I'll make sure that I do my best to answer it. And if for some reason I miss it, there'll be a Q&A section that we can go over. But again, the whole point of this is to make sure that you understand you have options. There's no one size fits all when it comes to mortgages. At John Adams, I've got more mortgage programs than any other lender I've ever worked for. So my job is kind of like a doctor. This is an analogy I've been using quite a bit. I'm nowhere near as important as a doctor, but God forbid, let's say you got into a car accident and you go to the hospital, and you know, you don't walk into that hospital and say, "Hey doc, I broke my leg, I broke my arm, I need X, Y, and Z as my treatment." Right? The doctor sits you down, has a conversation with you, runs some tests, does some x-rays, pulls some blood, and then once the results come back, then we sit down and we discuss what the options are. And it's very similar to what I do. So we're going to be going over some programs today. 1% down payment program, 3.5% down payment program, FHA mortgages. That's probably what most of the people have heard about. We do have grant programs. Some of the grant programs are non-repayable, which means they give you money at close. You don't have to pay it back ever. And then there's some loans like the MSHDA loans that are state loans, and those are our repayable grant programs. So we'll go over a little bit of all those here today. And again, I don't want to overburden you with details, but I want to make sure you're aware that there are options available for you. Okay, Jim. Okay. This home ready, home possible conforming mortgages. You might have heard Fannie Mae, Freddie Mac. That is essentially the regulatory agencies for conventional loans. This is I'm going to say a term that's younger than I am, OG. These are the OG, the original first-time home buyer programs. That's a very low down payment with 3%, lower than market interest rate, lower than market mortgage insurance. The loan amount that you can borrow is whatever for that particular point in time, the loan limits will allow you to do. Seller concessions again as well. You know, you can ask for all the way up to 9% depending on how much your down payment is. One of the common things you're going to see through these first-time home buyer programs is though they're trying to help a specific person. Not everyone is going to qualify, even if you are a first-time home buyer. Usually there's a requirement, a higher than average credit score, a lower than average income. If you make $200,000 a year, you're not the type of person that Fannie and Freddie and FHA are going to be trying to help. They're trying to help people with income that's under, in this particular case for this program, 80% of the average median income. So it's a very good program. If you qualify and you want the program with the lowest interest rates, the lowest mortgage insurance out there, this is the program that you want. Okay, it's a very, very good program. The majority of my loans for first-time home buyers are this particular program. Okay, Jim. Fannie Freddie FTH Advantage. So this is a more recent addition to the first-time home buyer program. It's very similar to what we just went through before. But the good news is if you qualify for it, all you really need to know is that whether you have an 800 credit score or a 640 credit score, whether you have a 20% debt to income ratio or a 45% debt to income ratio, whether you're putting 3% down or 20% down, the interest rates are the absolute same for everybody. Rock bottom, absolute lowest. This has a little bit more flexibility than the last program though. There is 2 levels of the program. This one will allow you to qualify for it for a little bit higher than the 80% average median income. It'll allow you to go up to 100% of the average median income. So it's a very, very good program that for those people that are still first-time home buyers, make a little bit more money than the other program, we get you qualified for this. Otherwise, the guidelines are essentially the same. This is for you that makes a little bit more income that you don't qualify for the last program. Okay, Jim. So this is the one that Jim is really excited for, and I tell you what, I'm really, really excited for it too. There's not too many lenders in the country that offer this program. For all intents and purposes, this is a 30-year fixed rate conventional mortgage. The nice thing about this is though it's a grant program and it's a non-repayable grant. You can get into the home for as little as 1% down, and they're going to give you up to 2% of a grant. So the down payment is a total of 3%. 1% comes from you, 2% comes from the grant, up to a maximum of $7,000. The cool thing with this grant is that you could close on a home today and then sell it tomorrow. You don't need to repay that grant. That's money that's given to you regardless of how long you've lived in the house. So it's a very, very good, very, very good program. And again, this is one of those things too where the loan level pricing adjustments are removed. So again, credit score is no longer an issue. If you qualify, you qualify. Down payment, all those things that would normally go back, Jim.
I did.
Oh, you did. Okay. All those things that would normally affect your interest rate, again, are waived if you qualify for the loan. You're a little bit more limited on this program than you are on some of the others. It's a maximum 3% seller concessions. It's a little bit lower of a loan amount. You can't go up to the maximum loan amount that conventional will allow. It's capped at $350,000. Another good thing with this one is this program is designed specifically, not only the grant, but it's designed specifically to waive mortgage insurance with 3% down. Normally, everyone, whether you're familiar with it or not, everyone knows the old school way of thinking is on a conventional loan, you put 20% down or more, you don't have to pay mortgage insurance. A lot of people, you talk to your parents. My parents bought a home 30 years ago. They told me when I was buying my first home, you got to put 20% down. You don't need to do that. This program will allow you to put 3% down and waive the mortgage insurance. The interest rate is slightly higher. Just as you might have heard this, nothing in this world is free. No one's going to give you something for nothing, right? But this is a good program if you need a grant and you need to lower your monthly payment a little bit by absorbing your mortgage, by not having mortgage insurance. This would be a very, very good program for you. Okay, you go to the next one, Jim. Okay, I don't see any questions yet. I just want to make sure I didn't miss anything. This program is very, very similar to the first program. I don't want to get into the weeds on it. It's a 3% down payment, a $5,250 grant. Still the same thing. It's a non-repayable grant. If you need an appraisal on the property, we will give you a $500 appraisal credit. Okay, it's not going to cover 100% of the appraisal, but the average appraisal right now is around 525 to 550. So it's going to cover the large majority of the loan, or a large majority of the appraisal. You can borrow a little bit more money on this one, where the last program was 350. This is 766,550. No income limits on this one. Really, really cool. The big advantage to this one, and what we're seeing a lot, especially this last year, late in 2023, the federal government kind of changed the requirements for people that are buying multi-unit properties, and they're going to live in one of those units as their primary residence. It used to be you had to put 20% down, regardless if it was a multi-unit. This is specifically if you're buying a 4-unit property, you plan on making one of those units your primary, you can get into it with 3% down. You get the grant. Again, you have to live in one of those units as your primary. The caveat, the other caveat for this one is it is area specific. So the area is changing constantly. It's ever evolving. Right now, the major areas are in the Metro Detroit area. Those cities close to Detroit, Dearborn, those particular areas, you do have to live in that area for 6 months before you can buy a home again in the approved area. And they will check that, whether that's through rent or, bills with an address on them, that type of thing. So this is basically the grant program that we just talked about before, allowing you to borrow a little bit more money, no income limit, so you can make $1 million a year on this program and still qualify. But it's for multi-units, people that want to buy multi-units.
Can I ask you two questions here?
Yeah.
Is there a maximum amount in the multi-unit property to be allowed? Can it be 6 units, 8 units, 10 units?
Right now it's 4.
4.
Yep.
The other part of the secondary question to that is, if 3 of the units are rented, do you use that rental income towards getting qualified for the mortgage?
We can, yes, depending on the lease agreements that you have, how long they've been existing. But we can use that to help you qualify as income.
So it is a possibility that
it is definitely a possibility
that you could qualify for more.
If you're buying a property, let's say you're buying a 4-unit, and you're buying 3 of the units are already leased and they have existing leases, and maybe the people have been there for a couple of years, then we know that there's a very good possibility for that to continue at closing. So we would consider that, we're not going to be able to use 100% of the income, but we would be able to use up to 75-80%, depending on the contracts, how they're written, how long those people have been there, those type of things. But yes, it is a possibility to help you. Okay.
This also sounds very similar to that FHA program with the same similar thing, or is this that program that you're talking about?
No, this is a completely different program because this is a conventional loan.
Ah, okay, very cool,
Yes.
very cool, great, thank you.
You can go to the next one. FHA mortgages. This is not a first-time home buyer loan. It's not. This is what everyone assumes though is an FHA, or as everyone, a lot of people assume this is the first-time buyer program. The reason why I got to be known as a first-time home buyer program is because for a period of time, 3.5% down was the lowest you would be able to put down on a property. Conventionals, when I first started this, conventional loans would only allow for 5% down was the minimum. And slowly they started to allow for 3%. So when I bought my first house 15 years ago, I went FHA just because it was the lowest down payment available. Okay. The other reason it's known as a first-time home buyer program is because this loan is designed for people that have new credit, not necessarily bad credit, but they're starting out and their credit isn't fully mature. Maybe you don't have an 800 credit score. Maybe you have a 620 credit score. We have programs that allow you to go down. FHA will allow you to go down to 550 credit score. So this is for folks that are just starting out or that have poor credit. You can get qualified much more easily on this program than you could on a conventional loan where the credit requirement is going to be 620 or 640. This also allows for a higher seller concessions. If you guys don't know, I've mentioned seller concessions before. We can discuss that. But essentially, you need to have a good realtor. Good news, you got one here with Jim and with Ruth. They're going to be able to, in some cases, depending on the market, depending on the house, you can negotiate with the seller to contribute a certain amount. In this case, on an FHA loan, up to 6% of the purchase price to be used towards your closing costs. It cannot go to the down payment, but it can go to everything outside of the down payment. Okay, so that's going to limit your out of pocket. Doesn't matter how much you put down, you can put 3.5% down, you can put 50% down. There is going to be mortgage insurance on an FHA loan. Okay, and they do charge you a kind of like, I call it a service fee, but it's an upfront mortgage insurance premium, which they charge you a certain percentage of your loan amount upfront. That's what you pay to use FHA loan. That's how they fund the program. And they roll that into the loan amount. So you don't have to pay it at closing, but you do have to finance it. And again, great first time, great option for people that want, with less than perfect credit, that want to put a limited amount of money down. Mishta Mortgages. This is another grant program that we have. We're one of the top lenders in the state for Mishta. Mishta is the Michigan State Housing Development Authority, and this is a state level grant. We can attach this to any loan product out there. We can attach it to a conventional loan. We can attach it to VA, to USDA, and to FHA. It's up to a $10,000 grant, down payment assistance. This is different than the other grants where it is repayable. It's a non-interest bearing grant. But the minute you sell the house, the minute you refinance, or the minute you pay off the mortgage, you are required to pay Mishta the money back that they gave you up front. So 1% is coming from you. 2% of the down payment is coming from the grant. Whatever's left over from that 2% will get put back towards your cash to close and credit towards your cash to close. Okay. So, and I've already discussed all that. And the good news with this program is the interest rates are fixed by the state. So it doesn't matter which lender you use. All the costs, all the interest rates are fixed. Everyone's going to offer you the exact same thing. Because again, it's a state level. It's a little bit more difficult to qualify for this loan because it does have lower than average debt to income ratios. And we also, while it does have household income limitations, just like a lot of the other loans, FHA did not have a maximum income cap. But this one is whether, let's say you're married and you have a spouse that's not going to be on the mortgage. On a conventional or an FHA loan, we don't need to worry about them. If they're not on the mortgage, we don't need to worry about them. However, on a Mishta loan, they don't need to credit qualify if they're not going to be on the loan, which that's a new development. They used to have to credit qualify, but we still have to include their income towards the household income limitation that's set by the FHA. And the maximum loan amount for a single family home right now, the most you could borrow is $224,500. $500. Jim? At John Adams Mortgage, I already kind of mentioned this in the beginning, we offer a couple programs that other lenders don't offer. We are a full service lender. Everything we do is in-house. You talk with me from the start. I hold your hand through the process. You're working only with me and my processor, and we get you to the closing table. But this is basically a loan, a file that is reviewed and approved by the underwriter. Basically, it's subject to the appraisal only, title work, and re-verifications. So not only does this make you a much stronger buyer in that market, I call the listing agent, let them know that, hey, you're already conditionally approved for this loan amount. It also knocks a bunch of time off what it's going to take us to close, because you've already been through the initial verifications from the underwriter. And the big thing too is it eliminates any potential, red flags that we may run into in process. That for instance, I'm not allowed to reach out to your employer and verify your income. There's certain things as a lender I am not allowed to do, but my underwriter is available to do, and they have to do it. So it's just one further step, one further check to make you as strong of a buyer as we can. The other program that we have is a second look program. If you are currently working with another lender right now, just for the opportunity to work with you, if you fill out an application and you submit your documentation, I'll give you a free, no obligation, $100 Home Depot gift card. Okay, just for the opportunity to work with you. We're not in the habit of giving away gift cards, and I win as a company on average. We win 94 to 96% of the deals that we get through the second look program. So we're good at what we do. Our pricing is extremely competitive. You may find lenders out there that are better looking than me, but it's going to be hard to find someone that's going to give you the level of customer service, the pricing, everything combined. And one of the other things, and Jim won't deny this, I've gotten his clients approved at midnight on the weekend sometimes. If most of the time you're out there looking at a house after work, you're out there looking at houses on the weekends. If I'm not available to you during those times, what good am I as a lender? You're about to make the biggest purchase of your life. I need to be there for you and hold your hand and walk you through it. Okay. And then at the end of the day, you may not like me, you may not want to work with me, but I'll at least be able to give you an opportunity to make sure that you're getting the best deal. And plus, we're seeing a lot of lenders out there that are doing some really weird stuff. And if I try to pull a fast one on one of Jim's clients, I'll never talk to Jim again, right? He's never going to refer me anybody. Not that I would do that anyway on a moral or ethical level, but at least I'll be able to review your file. I'll be able to review a loan estimate from another lender and make sure that everything is on the up and the up. Okay, that's a service that I provide. Okay, Jim. All right, what do we do to ensure a timely closing? I mean, at the first and foremost, we are proactive. We do a full tri-merge credit report. We gather all documentations. If there's a house that you want to put an offer on, I pull public records beforehand. I make sure I know what the taxes are, a good estimate on what the insurance is going to be, and I make sure that when you're qualified, your qualification is based on real live information. There are lenders out there that will pull your credit, or that will not pull your credit. You'll get approved without a credit pull, or they'll do a soft credit pull, not a mortgage credit pull. There are lenders out there that will approve you without mortgage documentation. Definitely, it sounds very appealing getting approved without a credit pull. What happens when they pull your credit 2 weeks from closing and you don't qualify, or the debt to income ratio is off, or the right algorithm wasn't used and your credit score is much lower than what they originally thought? People are doing it. It's not right. We don't do that. But then the other thing is too, a lot of what I do, just like today, is education. I want to make sure that you have, I ask the right questions. I'm able to walk you through the process and make sure that I can match the best program up to you, or with you. And then just the follow-up, the communication between Jim or Ruth, the listing agent. When that offer goes in, I'm on the phone with that listing agent, letting them know I have a tri-merge credit report. Your file has been reviewed by the underwriter. I've got all documentations. You're a sure thing at this point. We're moving forward, and I'll be able to get this loan closed within 30 days or less based on your qualifications. So these are all steps to make sure that you are as strong as a buyer as you can get. I think I've kind of already went over this. I don't want to sound salesy. I'm with Jim, right? A lot of this is education. Whether you use me or you don't use me, I'm always going to be a resource to Jim, to Ruth, and all their clients. Okay. At the end of the day, we're a full service shop between us. We're kind of like a mini team together. I'm going to be here for you. We are the experts. I've been doing this for a very, very long time. I've worked with a lot of lenders. I've worked with the large banks. I work with the largest mortgage lenders, the online lenders in the country. I've never seen any company, any lender that have as many programs available as John Adams Mortgage does. You're dealing with me from start to finish. I'm not going anywhere. A lot of times, your file once your file is submitted with the lender, you know, it goes off and some other people have to deal with it. Or if you're dealing with a bank or a credit union, they're more specialized. You're not going to get, you're going to, you know, you'll be able to maybe get a hold of someone Monday through Friday, 9 to 5, but after hours, you're not going to get the level of customer service. We do everything in-house. You know, we don't, a lot of underwriting teams are overseas. A lot of them are in different states. Everything is right here in Michigan. We're headquartered in Southfield. My office is in Clarkston, about 2 miles away from where Jim is, but everything else is housed in Southfield. We've already talked about the accessibility. I think this is a big thing too that a lot of people they don't realize is that there's no lender that's going to be more accountable to you than me. And the reason I say that is I am 100% referral based. I don't buy leads. I don't work for a bank where people are walking through my door and they already have car loans or savings accounts with us and they're looking for a mortgage as well. If I don't take good care of you, Jim's never going to refer me another client. Period. Point blank. That's how it works.
One strike and you're out.
yeah. I mean, really, and that's what it is, and that's kind of what it has to be. Now we're human. We make mistakes, but we make good on those. And you know, at the end of the day, I'm going to do the best of my ability to help you guys. So this is a slide we have in here, and you know, ultimately, before you even step foot in the house, my recommendation is always to get pre-qualified. You have no idea what you're looking at if you're going to qualify. You may not be able to qualify for a loan right now. We may need to work on your credit. I can run credit. I can pull your credit. I can run credit scenarios. I can tell you what you need to do. We want to make sure we pay off the right debt, not just start paying off debt blindly. We'll be able to do all that with you. You want a lender that's going to pull a hard credit pull. You want a lender that's going to request all your documentation. And the application takes 5 minutes to fill out. It's not difficult. And then all documentation these days can be done online and within 30 seconds, right? And the big thing too is don't make any large purchases. Before you do anything credit-wise or making any big purchases, you always want to ask me before you do something instead of asking me after you do something. Okay, that's the big thing. We don't want you doing anything that's going to go out and buy a car. Your score may drop 20 points. Right now, you have the average car payment right now, I think is like $500 to $600. That could very well be the difference between you qualifying and not qualifying, right? So that's my recommendation for this stuff.
Awesome.
I don't know. Is there anything else, Jim?
No, I think you got it. So thank you, Joe. Real quick, just a couple of quick seconds for Joe. Is there anybody have any questions for Joe directly based on what he presented so far tonight? Give everybody a second here. You must be pretty darn thorough, Joe.
Either that or I put everyone to sleep.
So, well, let me move right into the next couple of steps here. So the rest of it will be done. We should be done, as I always do, is I always make sure we're done with an hour right after we get done. This kind of will help you finish up the journey. So we went through the first 3 steps. One of the most important steps is to get pre-qualified before you get started. So once that hump is over and you're done and you're set, we have a copy of your pre-approval letter. Then the next thing you do is we start talking. Now, what I do is I do have some buyers that are in search engines just looking that may not be pre-qualified yet. But for those that haven't gotten through that step, I know I have Phil in a search engine right now. So the next step is really identify your criteria based on what you're pre-approved for. So That's really the next thing, is figuring out what location, the pricing, bedrooms, bathrooms, that kind of like deal breaker things that you would like to find out, that you'd like to get set up for. So I kind of bring the world to you. Okay. So instead of looking on Zillow, Realtor.com, Redfin, all the different websites, why not have all of those websites just come to you directly in one neat email based on your criteria, which makes it real easy. You can set some criteria in some of those websites, but this one is the end all be all. If it's out there for sale, our search engine will catch it if it fits in your particular criteria. Then we start looking for a home. You start favoriting what you like. And then we actually physically get out there and take a look at those homes. We'll schedule the showings. Things that you want to consider when you're doing it is you want to consider the location, the neighborhood. It still holds true today. Location, location, location is very, very important for you. You want to make sure that it's a really hot deal or home that you can make money in your investment. So if this house has been on the market 412 days, you want your agent to find out why. Is it just the current condition of the house? Is it overpriced? Or is it based on location? And is there a history of long time? Every time it's been on the market, it's on the market forever. It may not be the right house for you to purchase. I care about you and your ultimate investment of a home, not just to try to sell you something. I like to make sure that you're getting an investment in there. So then we get into crafting and making an offer, and this is really important. So we will go through all the different steps for you in crafting that offer. But the big thing that you want to remember is that you want to act fast. So yes, that house has been on the market 38 days. But guess what? When that price recently dropped, other people are all of a sudden looking at that house that wasn't looking before. So if we take too long, someone, believe it or not, can scoop it right up. But then we'll try to figure out the best price and try to get it under contract for you. We absolutely communicate with the listing area agent. So pivotal. We want to find out what's important to the seller. I try to bleed as much information as I possibly can from the listing agent to find out how far we can push if we do get an opportunity to get a deal on a home. But great communication is key, because then if there is multiple offers on a home, he or she will remember that agent that spent the most time with them and working with them instead of never hearing their voice when they submit an offer. We'll look at neighborhood trends and compare values for you. We'll help you determine what price to offer, and then we'll help negotiate the terms and contingencies that are out there. So there's a whole bunch of contingencies out there. So things like, if it's a multiple offer situation, is it over asking price and an appraisal guarantee? We actually have an addendum called an escalation clause that will help us win those offers in a multiple offer situation. And we can talk more about that when you get into the situation. Nothing you have to really worry about now. Why lenders are so important. Let me tell you, if it's an out-of-state, no-name lender that nobody knows about versus a lender, especially in a multiple offer situation, versus a lender that the agent knows really well, that really makes a big deal. So because they don't know if there's no history, or they don't know that lender very well, they don't know if they're going to get to the closing table. Their goal as a listing agent is to get their seller to the closing table, and they need to feel comfortable in the lender that you use. Okay. So what happens if they accept your offer? It's really not a contract until the seller signs. Once they sign, they send the offer back. If there is no changes, like if they didn't make any changes to our offer, it's technically accepted and becomes a binding offer. And then all you're doing is bottom line signing it that you received it. If they made any changes and submitted a counter offer to us, then that offer is not valid unless you accept the counter offer. Okay. And then you bottom line and initial the changes that are performed. Okay. And even though they might have signed the offer and they've never sent it back. It's still not binding until I've accepted it as your agent. The next part of that is an earnest money deposit. That's really, think of it as earnest money deposit as a security deposit. That's always in a contract. It's your money. No matter what, it goes against your down payment and closing costs. It's typically 1% to 2% of the value of the home. The more deposit you put in, the more security blanket that the seller feels and in your offer, because you're willing to put up your money. It's really one of those situations that help prevent you from just randomly backing out of the contract. Because if you do randomly back out and it's not due to a contingency that we've written in the contract, you could actually lose it and the seller could get that earnest money deposit. But that has to be turned in. That's a state regulation. It has to be turned in within 2 business days of accepted offer. Then we start the loan process with the lender. We send the signed documentation to someone like Joe, where he gets started actually with it. And then we work with the agent to schedule your inspection. Okay. Step 7, post offer tasks. Ruth, you got it unmuted there?
There we go. Sorry about that. Post offer tasks, James just mentioned the first one, which is inspection. And this is really key. You want to have a professional inspector come through the house and check out all the systems, all the attributes, the attic, the roof, the sidewalk, all of that, to make sure everything is ready for you, and that it's a, you know, that the house does not have any health or safety issues. As a buyer, you pay the inspector directly, and it's generally $300 to $700. That depends on how large the house is, how many bedrooms, how many bathrooms, how many pole barns, how large the property is, whether they're checking the sewer, whether they're checking the water system or the well, all of that. But it's absolutely worth the money to have an inspector come through. If they happen to find one major health or safety issue, say black mold in the attic or something like that, you absolutely want that identified so that you can go back to the seller and have them make repairs. So once the inspector is done with the process, and it usually takes about 2 hours, 1.5 to 5, depending on the size of the property and the complexity, then they will generate a written inspection report or a digital inspection report, and usually have that out to you within 1 or 2 days. So as far as what you want to ask the seller to fix, we like to limit that to major health and safety issues. We don't want to pick them apart because they have a chip in the paint or something like that. You only want major things that would keep you from purchasing the home. And the next point is, what are my options? Can I back out? Yes, you absolutely can. If there's something major, or you have a valid concern with regard to the inspection, yes, you can back out. We file a written disclaimer with regard to that. Next, James. The next step is the bank sends out an appraiser, and that is something that you do pay for as well, although that's included in your closing costs. And the purpose of that is to determine the value of the home and the level that the bank or the mortgage company is willing to handle for it, be willing to put on that home. What is an appraisal waiver? That is, well, actually, I'll ask James. Could you explain the appraisal waiver for me? it's saying you don't
Oh,
need
there we
an,
go. There you go.
okay.
I'll even defer that to Joe, even though I know the answer. I figure I'd throw the lender in there.
So I'm gonna address these last two things.
Yeah.
You do pay the appraisal up front. Typically, a good lender will not order the appraisal until you give us the thumbs up from the homeowner's inspection. Why pay for an appraisal and have an appraisal done on a property you're not going to move forward on? So, but we'll always wait. I will always wait until you give me the thumbs up from the inspection and all negotiations are done, if any, from the inspection. An appraisal waiver is something that the lender does not determine, but there are some opportunities where an appraisal on a property will not be needed or will not be required. Not all lenders allow for this. John Adams does. But what happens is I take your information and I run it through the federal guideline underwriting system, Fannie and Freddie underwriting system, and they come back and they say, okay, considering the qualifications of the client, considering the value of the home, considering how much we're paying for it or what our loan amount is on it, we are comfortable with the value as is, and we do not need to appraise the property. Those are definitely things that are available and optional. We're really not seeing it though, unless you're putting 20% down or more on the property. But don't expect it. We're also running into something a lot called appraisal acceptances, which means that Fannie and Freddie, they're okay with the value of the property. They just want to go send someone out there to verify that the house is in mortgageable condition, maybe take some measurements. But it's not an appraisal. They've already accepted the value. They just need someone out there to basically collect data. In that case, it's a lot less expensive. It's about half the cost of an appraisal and a lot more timely as well.
Thank you.
You're welcome.
So next thing is the title search. So as all of this stuff is going on in the background, title companies do a title search to ensure that it's kind of like what they call a clean title to provide the buyer and the mortgage company. So so when you basically close on a house, nobody can knock on your door and say, why are you on my property? This is my property. So the title company does a history search to ensure nobody has ownership other than the current owner on the property, that there's no existing liens. If there is, the seller has to take care of those liens all prior to closing unless otherwise negotiated in the contract. There's a lot of things that go on in the background. They verify like everything from the meets and bounds in public records, to making sure that there's no liens on the property, to ensuring that the taxes are paid, that the water bill is paid, and things like that. They want to make sure, think of it as a clean bill of health, clean slate for the title to be able to provide to you at closing, essentially. So occasionally there is some exceptions in there, but they're minor standard exceptions that we can always explain, but that's more of something special rather than the rule. Okay. But title search has to be done prior to closing. They will not close without having a good title. I know the mortgage company definitely won't. They say, sorry, it's got to be part of it. The other thing that you also have to work with your lender on is there may be some additional paperwork that they may ask you. So I used to have this little cartoon of like a dump truck filled full of papers backed up to lending institution of all the information that they want. And just when you think that they have all the information, they might call you and say, well, I need this, or I need page 8 of this, or I need section 6 of this, because we can't read it. All they're doing is just verifying everything to make sure that everything is good. Because remember, they're loaning you the money. So they just want to make sure that obviously you're going to pay it back ultimately. So you also want to do work on finding homeowners insurance, another very important piece. If you don't have a favorite insurance company that you have with your cars, and you would like to work with one of the people that I refer out a company called Insurance One, and then I also have another gentleman that also helps me too as well. Both of them can help you find the best homeowners insurance coverage for you in advance to help get you some of the best rates. So we're here to help you with that if you don't have that availability. once the lender gives you the clear to close, I mean, it's kind of like, oh, I have a clear to close. We can close on the house. That means they've gotten everything that they need. They verified everything and we're ready to close. So then they issue you kind of like a final CD for you to be able to review prior to closing. And then we get ready to schedule the closing. We schedule it. Final numbers come out. You go get a certified check or wire, whichever you want. And then you get to attend the closing. The actual closing takes about an hour in order to complete. The seller and the buyer are usually there at the same time. On occasion, we do what you call split closings where they're not. So it's an opportunity to ask questions. We also do a final walk within 48 hours prior to closing on the home too, to make sure the home is in the exact same, exactly the same as when you purchased it. Then on closing day is when you work on changing your address and make sure the utilities come in your name, and you start packing. Some people are already packed, ready to go on closing day and actually move. Others get ready to move right after. So just some things, just overall things that you want to think about for budget and closing costs is usually 2 to 3% of the loan, for the exception of there's those programs out there along with seller concessions. This is where you want to spend time with someone, well, Joe or someone like Joe, to actually go over and figure out what's best for you. But this is just some general things to think about. Okay. Both the buyers and sellers do incur closing costs. Matter of fact, the sellers pay more closing costs than the buyers do. Earnest money deposit is minimum of 1%, but it could be between 1 and 2%. Inspections, once again, between $300 and $700. A few miscellaneous fees out there. You're going to pay for a 1-year homeowner's insurance policy. You can either pay that up front or you can actually add it to your closing as part of your closing expenses. A lot of clients do that actually now. And then you need to have some reserves for improvements and repairs after the sale. The one wonderful thing about home ownership is there's going to be times where you get a surprise that you want to make sure that you save for on a consistent basis, similar to what has happened to me last week. So you gotta be prepared for that. When I had a pipe burst in the house, that was fun.
Or if you, I'm gonna interrupt you, or if you buy a house and you go to Home Depot for some wood screws, a $2 box of wood screws, and your wife decides to come along and you end up spending $2,000 on bathroom fixtures. So that happens too.
So we talked about the close, so I don't really need to. Oh, you do want to bring your valid driver's license. That's one thing that I didn't mention about the closing. Any outstanding documents that's required from the lender, and then you're going to get a whole huge packet. It's a copy of all of your signed documents. You're going to probably sign between 100 and 160 total documents. You're not going to sign every single one of those pages, but it's basically about 160 page closing, you know, that the title person will go over with you. So, and then obviously you get keys to your home. So the next step, as you can tell, is really easy. You get to move in. You get to schedule your moving and all of that. And on moving day, if you happen to be working with us, I always provide food on your day of moving, because that could be a very stressful event. And when you have people over to help you out, trying to figure out how to feed all these people, don't worry about that. You let me know on the day you move, and whether it's lunch or dinner, and I have it specially delivered on the day of move for you. Just something that we do for you.
That must be new because you didn't do that when I bought a house.
I know. Yes. Well, we've been doing it for a couple of years now, but yes,
That's awesome. I didn't know that.
yeah. So we do provide that. So
It's
and
Ruth's Chris too. He told me it's Ruth's Chris. So
yeah. No, well. Now, when we talk about enjoy service for a lifetime, we're still there after the sale, just to let you know. So even after the deal is all done, we like to be your reference for all of your real estate needs. So like right down to a vendor. Like for example, I had a pipe burst at my house, a surprising thing that happened when it got really cold. Okay. And I knew immediately who to call, one of my vendors, and I actually had somebody out in 2 hours, actually, after I turned off I had them out in 2 hours to completely replace and get the water back up and running again, because I have the database of vendors that I refer out. And I spend time vetting all of our vendors to ensure that they give you great service, like Joe Galvez, for example. And when he joked about it, says, "Hey, I have to take care of all of Jim's and Ruth's clients." It is the truth. We joke about it, but it's the truth. They all know that if you mess with any of my friends and clients, and by the way, everybody makes mistakes. I make them too. But it's how do they fix the mistake? If they fix the mistake, awesome. But if they do not take care of our clients and our clients are upset, they no longer are part of my database. I don't even mess around with that. It's all about providing awesome service to everyone that we work with. So we want to be your end all be all for a lifetime. And then when it comes to for friends and family, we're always here to help your friends and family too, because we're never too busy for that. That's how we build our business, is by taking care of each and every one of you. So that's really it. And how we love working by referrals. So just a real quick, once again, that's really the journey of buying a home. There is other little details in there that we kind of hold your hand and help you with, but this is just kind of like the overview of everything, just to get you kick started. So for those of you on the call, do we have like any questions whatsoever? Anything? Would love to hear from you. Well, I hope it was pretty informative and helpful to everybody tonight. We will be posting it also on our YouTube channel, the Altini team, that we've just gotten started last year with some of the other things that we've had for some of our Zoom calls too. I want to thank Joe, Ruth, and Maria that's here on the call right now today to kind of help us out today for all the information that we have. And just thank you. Thank you for allowing us to help everyone. Joe?
Thank you for allowing me to be part of it. I appreciate it greatly.